Hello everybody, welcome back. Another day, another portfolio review, and we have a good one today. Today we're going to be going over Parker's portfolio that he sent to me over on the Discord. Parker is 18 years old, he's a dividend focused investor, and today's going to be a good one. And once again, I want to take another moment to appreciate all of you for submitting your portfolios. The demand has absolutely been insane recently, so I want to take a moment to thank you all for that, because without you guys the series isn't possible. And also, if you do want to submit your portfolio, do it in the Discord, link in description, or message me on Twitter at Ryan Dengler Show. I love to do this series to get exposure to different types of investing strategies, new stocks that I may not have heard of, and give you guys a platform to share your stocks that some people may not have heard of. And of course, promote transparency, something that a lot of other finance creators can't do, but my viewers can actually do. If that sounds like a plan to you guys, smash the like button, subscribe for me, turn on post notifications so you never miss an upload. I do this series every single week. Alright, let's roll the intro.
Dissector, you an idiot.
Hello, I like money.
So with these series, this is the 28th edition of the portfolio reviews that I've gone over. And I've gone over portfolios that are worth $5 million, and I've gone over portfolios that are worth $500. It does not matter. The overall goal here is to get exposure to different stocks, goals, philosophies, and so much more. The portfolio value does not matter whatsoever. So Parker shares that he's 18 years old looking for long-term growth through dividend stocks as well as AI stocks and non-dividend yielding companies. He has 4K in his AI stock account, 4K in his growth/ETFs account, and a little less than 1K in his dividend portfolio. First off, I want to say good job. You're 18 years old and you're investing. That's a great start that not a lot of people have. Most people our age on Saturday nights, they aren't going to the Cash Flow Kings live every Saturday at 8 p.m. Eastern. They're out doing some other pretty dirty habits that we can't discuss here on the channel. But you're a real man if you come to this channel and taking time to learn in the first place, and also putting your money where your mouth is and actually investing your money instead of like spending it on clothes or other stupid things at our age. I think that's really good. I'm very curious to hear in the comments section about your perspective on AI, because for me personally, I'm not really big on it. Especially at our age, it is the big, fatty thing to go over. Everybody likes AI. It's going to take over the world. I'm personally not like that much of a bull on it, but I'm very curious to hear your perspective on it. Like, yes, I think that it's going to be important in the future, but I think it's going to have more of an impact on like actual businesses that like aren't really AI companies. I say that the real man's AI companies like Target and Kroger, the companies that are going to benefit with like robotics and automation. I say it as a joke, but it's true. I think that it's interesting that you have 3 different portfolios. You share the current holdings and the few companies that he wants to finish his portfolio off with, and he also shares he's going to be reinvesting the dividends. Let me know how I can improve the holdings. Thank you. First off, thank you for submitting the portfolio, and I would also recommend buying VU in just a separate account, preferably a Roth IRA. That's my plan at least. I think that's honestly just a solid way to go. Put a decent amount of your net worth in VU and chill. He just shared the dividend portfolio, so that's what we're going to be going over. But to start off, he has CVS. And with CVS, I'm really iffy on this company. I just personally think that there's a lot better options. I don't think the retail kind of landscape of things like that was going to really go anywhere. But with Dollar General and Walgreens closing a lot of stores, definitely isn't a good look for them. Obviously, their healthcare segment's going to be the big thing you're investing for at this point. The free cash flow is solid, but it has been declining for the last 4 years. I'm really curious to see how it is for the future, but me personally, I'm not touching it. I just believe there's better options. Next, he owns IBM, and IBM has had a crazy run up in price recently. But unfortunately, looking at their earnings, it doesn't appear that anything has really impacted that's happened so far. I like companies that have great reaction to price because of their actual like free cash flows going up. We could see pretty much for the last 15 years their free cash flows will remain the same. It'll be curious to see if AI is actually worth its talk here, and if it'll increase their earning power, but I'm really curious to see how this one turns out. There's definitely a lot of upside here, but I don't know if the AI will equate to free cash flow. I really haven't done a lot of due diligence here. I don't love it. Next, he owns Coca-Cola, and I think with Coke, I think it's alright, but I think for our age group, I think there's a lot better options. We have a lot of compounding ahead of us. Coca-Cola is a company that has limited growth ahead of it. I don't love this holding. I own it too. I'm looking to sell out eventually. There's just a lot better options, I think, for our age. It's not a bad stock whatsoever, and the same can be applied for the next one, which is 3M. Now, I actually just recently sold out of my entire 3M position at a 38% loss. It was the biggest loss by dollar amount in my portfolio, and it was a hard one to sell out of. I hate buying stocks and selling at the bottom, but with 3M, there was a huge change qualitatively in the business that I did not foresee when I bought the company. I made a whole video on why I sold 3M. I'd recommend you go check it out if you guys were really curious why. Essentially, I just messed up in my investment process. I bought the stock when I was a beginner investor. I assumed that it would just go up over time, and unfortunately, an unforeseen lawsuit happened, and they're losing all their free cash flow because of it. They're likely going to be forced to cut/reduce the dividend in the future too. So I'm not just going to bag hold the stock and have it be a complete sandbag on my portfolio's performance just to hold on to that 5, 6, 7% dividend yield. I got to put my money where my mouth is and practice what I preach here. So I sold out on my 3M and I put it into some companies that I believe over a long-term time horizon will compound and make up for those losses. Once again here, I don't love this position. It's definitely more of a recovery play, but I think there's a lot better options for our age group. But I definitely do like the next company, which is Starbucks, stock ticker SBUX, which is one of the most discounted companies in my portfolio right now. Right now, Starbucks is roughly $1,900 worth of my $23,000 portfolio, and I'm looking to build up that position as we speak. It's a core holding, and I think it's discounted right now. I think a lot of the reasons that the stock is down is really stupid, and in a long-term time perspective, a lot of people forget about it. I've made literally a playlist ranting about why I love Starbucks stock so much, and I recommend you go check it out. It's an awesome company. I think it may be one of the only quote-unquote value growth plays right now in the market with everything trading up, and I'm happy about it. As a long-term investor, I want my amazing businesses to go down in price so I can buy more of. Speaking of another quote-unquote discounted company, Vici is the next holding. Vici is a bigger holding in the portfolio too, and I really like this one. I think Vici offers not only dividend yield, but also solid growth potential as well. Their properties are truly one of a kind and can't be replaced, with an awesome location on the Vegas Strip. Thankfully, though, they have been diversifying out of Vegas, so if something catastrophic were to happen to Vegas, they would be impacted less. Right now, with interest rates, Vici has been falling in price, which I think long term is an amazing time to buy more. Utilities and REITs are two of the companies that are impacted by higher interest rates, mainly because of the higher leverage that they use to run their business. So I think long term right now might be a really appealing time to buy some of those. He also owns 2 ETFs in his portfolio as well, and to start off he owns DGRO, stock ticker DGRO, which is the iShares Core Dividend Growth ETF. This one's pretty solid, even though I prefer SCHD as my dividend ETF, which is the next one that he owns is SCHD. Now, I would consider possibly going to SHG and SHD. I think DGRO is solid, but I overall think that if you're looking for dividend income, you can go with the SHD, and if you're looking for those total returns and growth, you can go with SHG. I think overall that'd be a better combination, but that's just me personally. And yes, guys, I recently started my SHG position. Video coming soon. He also shares a few companies he's looking to add into soon, with those being Visa, which I think is an awesome company. I would definitely buy that one. Lockheed Martin, I think that's one solid as well, as long as there's going to be war, which there definitely will be. They'll be beneficial. And Home Depot, which is another awesome company that I'm looking to buy at around $320. So with Visa, I honestly think right now, long term, it could be potentially a fair price. It's an awesome business. It's continued to grow its earnings. I would love to buy a lot more in a dip, but I think if you don't own it right now, Visa and MasterCard, I think they're a fair price right now, long term, especially for being 18. You're definitely not going to be paying a discount for this company anytime soon unless we go into a recession, but I think right now, long term, they produce so much free cash, so there's a lot compounding to be had. I think at 18 years old, it's worth maybe paying a bit of a premium for an awesome business that's going to compound for a long time. I've never really looked into Lockheed Martin, but looking at the financials real quickly, it looks solid, and Home Depot as well. I think those would also be great additions and supplement of your 3M, Coke, and maybe CVS position in IBM. Alright, thank you Parker for submitting your portfolio. I hope I helped. Alright, thank you all for watching, making the video. If you want to submit your portfolio, do it on Discord or on Twitter at Ryan Dangler Show. Alright, thank you guys for watching. Smash the like button, subscribe, and do Dividend Stocks on Drugs. Have a good one.